We're going to be talking about some stock ideas, checking in with some news sources here. We got a little bit of an issue for the market. I'm going to wait for a few more people to wake up here, and we're going to go over this in just a minute. I'm checking out some news over here, and it could be we could have a little issue here. What penny stocks do you recommend for tomorrow? I haven't researched my stocks for tomorrow. You'll know that I do a video every morning and talk about 5 stocks to watch before the bell. We're going to have to go over a little issue we got here. What will happen if the government shuts down? Government's never going to shut down. No, I do not help people build their portfolio. That is not what I do. That is a certified financial planner, and it is definitely not something I will ever do. We go over stock picks. Somebody asked about Mr. Buffett, who I was actually going to get into talking about this morning, because it's pretty alarming. Every other week, I will make a video talking about, hey guys, and I'm not making this video for me. I'm making this for the young investor. Okay, this video, if you're a young investor, you don't have the time in the market where you've seen some market crashes or some really bad things happen, where it kind of like you look at your portfolio and it feels like a boxer just punched you in the gut. Okay, this is what I'm talking about. This type of feeling. A lot of you guys have not experienced that. I'm just getting people prepped because the market is way high and nobody likes to hear it because they log into their portfolio. They say, oh my God, this is my phone. This is my portfolio. I'm the greatest trader ever. Everybody's the greatest trader when the market goes up every single day. Just being honest. I know you don't want to hear this, but I speak real stuff on this TikTok. Everyone's the greatest trader when the stock market keeps going up. I even tell some of my friends like this, and I'm like, what the hell are you talking about? The market's only gone up. So the Buffett indicator, has anybody heard of the Buffett indicator? Okay, the Buffett indicator has stock valuation passes 200% beyond level he once said is playing with fire. Now, I would love to read you this article, but I just realized I need to have a CNBC account. I really need to create my CNBC account, but it doesn't even matter with the article. I'm going to tell you what the article is going to say. Be careful. We're playing with fire here. The market's been so hot. So here's the thing. When Buffett talks like this, right? And when I talk like this, I have a lot of money in the market, decent amount for me. I'm just being real because the young investor is going to get crushed and it's going to hurt them for the rest of their lives. They need to have a longer term outlook. The fear greed index, everyone has such a short term outlook. Everyone wants to make 100% in 5 days. Like, guys, this is not, realistic. You have to be really careful with these kind of just gambling so much with these stocks. But my biggest concern is this. We get on these lives, we look at a lot of these stuff. Dividends, you have to think about if a stock was at 50 cents and then all of a sudden it's at $10, okay? And they're like, Mikey, what do you think about this? I'm like, same thing with Opendoor. You have a lot of people in at 50 cents and now it's at almost $10. It is concerning because those people that are in at 50 cents, $1, $2, when they realize, hey, I'm up 500% on this one stock, but the whole rest of my portfolio for the last year, I'm up 10%. Maybe you're going to take a profit. And if a lot of people do that, what happens is, especially with retailers, it creates this, like this. It creates this effect and everyone starts selling off and then people lost their fortune or all their savings. Because people message me or I see the comments, they're like, I bet the farm on this one. At the farm? Martin's asking about profit in high dividend ETF. Are we talking about high dividend ETFs? Bought a ton of stocks April. Martin, if you bought a ton of stocks in April, buddy, I know you're doing well. Meta, Nvidia, Google, and now cashing profits, reinvesting those. Oh, okay, you're probably getting some dividend stocks. That's what I like to do a lot of times. So you have to create and figure out your own risk profile. And people will ask me, I don't know your risk profile. I don't know what's going on here. So you got to have a different risk profile. My risk profile in my life is I'm an entrepreneur. So I already have like that, although 9 to 5 jobs these days are risky, it seems like. I already have a high risk profile with my business and then with my real estate. Real estate's not really that risky, but if you lose tenants and other stuff. So then you have to figure out how much on this other side, the stock side, you want to be risky. I don't want to be as risky on the stock side. So you guys will see me do trades and I'll be like, yeah, this maybe only be for a couple days, something like that. And that's because a big chunk, this means big chunk of my portfolio is in much more stable investments, kind of like ticker SCHD. Now, people are giving me hell recently about SCHD because the performance over the last year is not pretty. It's not down. It's only up a little bit, but it still pays a dividend. But we're going into a lower interest rate environment, which is going to be good for this ticker. This is like a bazillion-dollar deal. So yeah, Oracle is pissed. Okay, I yanked SCHD, wasn't doing anything. DDFW. So DDFW yanked SCHW and then went into QQQI. So like QQQI for me has been great. I just received DDFW. That DDFW. I think you got your dividend on Saturday, just like me. So I got a $100 dividend. QQQI, $100, a couple others, $140 yesterday in dividends. That's freaking great. $140. I've been putting capital weekly and paychecks into QQQ to build capital for 2026 trading. This is fantastic to wake up to these dividends. Now, are dividends sexy? Absolutely not. But at this point in my life, I don't need to be sexy. And what I think about this is, on the other side, I talked about this is the other side. This is the entrepreneur side. I can make a lot of money on this side. I have a lot of skills on this side. I've been doing this for 20 years, okay? The goal is to have fun on this side a little bit, but not spend too much time here because I can make a lot of money here, bring this over to this side, put it into something like an SCHD, a QQQI, a JEPQ, a JEPI. One I've invested a lot in, a decent amount, is ticker DIVO. Has anyone heard about ticker DIVO? It's the Amplifies CWP Enhanced Dividend Income ETF. This one is a slow burn up and it pays a pretty good dividend. So this one I've had for a little while now. I got a position in there and I've just been holding it, collecting the dividends, and it's honestly pretty good. It pays a 4.6% dividend. You guys see what Mercenary just said? SCHG is good stock to buy for the long term and good dividends. So SCHG is definitely not great for dividends, but a hold for a long term. If someone said, Mikey, you have 3 tickers you can choose to invest in and for the rest of your life, SCHG is on the top of my list. Top 3, guys, SCHG. I actually need to do a video about SCHG. I'm going to tell you why I like SCHG. SCHG is the way that I invest in a lot of tech companies, and I do it without worrying about my entry point, right? Because everyone's thinking, you're like, okay, Nvidia's a hot stock. Is this a good time to get in? What about Meta? Yeah, Meta it's printing money. It's social media. It's freaking printing money, right? SCHG is like the top 10 holdings are so fantastic for me because I can just invest in this, okay? So I'm going to go from the top to the bottom of, as far as portfolio, the top 10 holdings, which is going to be about a good percent of this stock, probably 50%. So we have at the top, we have Nvidia, Apple, Microsoft, Broadcom, Meta, Tesla, Google A, Google C, and then Visa, okay? These are all fantastic names, all in the SCHG. So what happens is with this ETF, every time you buy one share, which is around like $31 right now, you're getting a small piece of each one of these stocks. That's the easiest way to go. But where are my stock tickers? Where am I? Oh, What do you think about SPI, SPYI, JPIQ, and JPI? What do you think about SPYI? Love it. I don't own it yet. I will be building a position in the SPYI. GPIQ. I don't know about GPIQ. Where did you get that one from? GPIQ stock. Let's see. Goldman Sachs NASDAQ 100. Oh, okay. So a GP. Okay, so that's a GPIQ. Just I'm guessing without doing my research here. GPIQ is probably it's about the same as QQQI. Okay, so I love QQQI and I love JEPI. So who is that? Mercenary. Me and you are on the same path with a lot of the dividends and passive income, right? You're going to hear a lot of people talk about passive income and what passive income is, and it's like, oh, I got this passive income here, passive, and they're telling me what the business is, and I'm like, that's not passive. Like, you're still involved in that, right? Something's coming up. I have found for me, and you guys put it in the comments if you found something different. The only passive income I've really found is investing in certain stocks and ETFs that pay dividends. Like, this is, I wish, and one of the reasons why I'm on this platform yelling at you guys every single day is I wish I could have found someone like me 30 years ago and I would have just listened to what the hell they were saying. Now, I'm not saying you have to listen to stocks I buy because it might be different than what you need. Just the fact that you can start at a younger age and start building up this portfolio and where it will be in the future and how much easier your life will be. I was in and out of, like, I'll give you a little background. Over a few years, I amassed so much wealth that I leapfrogged over into a very good position, mostly through real estate from 2018 to 2022, with purchasing a lot of real estate and investing now into stocks. Would you think Open will crash to $6? Open could definitely, you guys don't want to hear it, but you asked. Open could definitely crash to $6. Like, it wouldn't be hard. I'm loving Tuesday payers. What are your thoughts? What are Tuesday payers, DDFW? Hop it in the comments here. Can I all in on Opendoor tomorrow? Can I all in on Opendoor? Mir, will Opendoor up tomorrow? Should I sell Opendoor? Bought at 9. You bought Opendoor at 950. I'm in at 9. It's not a great place to be. I would sit on it, open for a bit. The rate open, I'm telling you, Opendoor. I love the potential. I love the new CEO. They have a lot of work to do. They literally have been sitting on their hands for 3 years, and then now there's all this hype because of, one person writes an article. It is there's a difference. The stock itself for me is way overvalued. I'm talking exponentially, but there's a lot of opportunity. So stocks currently in today's current evaluation can be way overvalued, but if the potential is there to go up, what happens is the potential and the earnings go up, and then the overvalue starts coming down. As the earnings start coming up, the companies have to make money, guys. It can't just be a hype machine forever. There's got to be additional, not just revenue, it's got to be revenue and then turn revenue into profits. What's in between that is your gross margin, okay? So you got to have margins. Right now, the margins are so thin, okay? They have anorexic margins, okay? That's the problem. That's why they need more products and services that have better margins so they can make good money. What are your thoughts on the income flow ETFs like Roundhill? I think I actually have QDTE. I think that's a Roundhill. So I have one Roundhill, QDTE. I'm doing okay on it. It pays a weekly dividend. Let me tell you the problem with some of these guys. Yield Max, I just don't touch Yield Max. QDTE is not quite into that category. The problem is this, and you'll see this with these high yield ETFs, okay? You have underlying assets in these stocks, okay? Like a Roundhill. Okay, so think about this. You have these dividend ETFs or high yield. Okay, you have an ETF. It pays a high yield. It looks so attractive. You're like, I can make all this money from this yield, okay? This looks good. It'll get you. It'll get you excited, get you minty, okay? The problem, okay, what's going to happen is you have an underlying asset. That's what they own. That's what they're selling covered calls on. And it looks good in an up market. It looks good, but everything looks good in an up market, right? Now, you can see this in April, we had a major downturn. Anyone invested, you looked at your portfolio, it looked like this. That's called major downturn on the lives. See that? So say you have like QQQI and QQQ. So QQQ is a regular ETF. The QQQI is doing covered calls on this. They both go down in April, okay? Now here's the thing, the recovery, QQQ will recover really quick because that's the true underlying asset, whereas the covered call ETF lags, okay? So your account, even though you're earning dividends the whole way on QQQI, you would just have to remember that you got to remember that underlying asset is much slower to catch up to. The ETF is covered call assets, slower to catch up to the underlying asset. I was down 30K on Opendoor until Eric Jackson saved me. Oh, wow. Who is that? Pony Express? Okay, Pony Express. Let me ask you a quick question because we got a lot of people that love Opendoor here. I was down 30. So Pony Express, here's a question we can all learn from this guy. You were down, Pony Express was down 30K on Opendoor until Eric Jackson saved him, now up over 100K. Do you know approximately when you bought Opendoor and for what price? That's what I'm curious about. Pony Express, when you bought it and at what price? Like, did you hold it for 1 year, 2 years? Let me pull up Open's chart. Okay, let me do a max. So you maybe bought it around, you probably been holding since about 2022, I'm guessing, Pony Express. You probably you had to have held that for a while because it's been under $2 for a while. But now up 100K, let's go. That's freaking let's go material right there. Let's see, open stock. Okay, so Pony Express wrote it down, probably bought around 2022. I'm guessing in 2022 sometime. Wrote it down, held on, came over, and then wrote it back up. That's not easy to do, guys. That's not easy to do. Don't be married to open if you can't yank and relayer. Yep. What ETF doesn't lose too much value when dividends are paid? Something that is not a covered call ETF generally does better with being more stable, kind of like SCHD. A lot of people don't love SCHD at the time, right now, but I'm telling you, people will fall. I feel like people will fall back in love with it. I'm still buying more. TSYY is killing it. That sounds very yield max. Yeah, yield boost. Oh. See, here's the problem. Once again, I can do a 1 year on TSYY. A lot of these are paying a crazy dividend, which you are going to be paying taxes on at the end of the year. And your underlying asset keeps going down. So they're saying they're killing it, but I'll show you the chart. You see that right there? So this is just your it's called NAV erosion. Your net asset value is just getting killed. So what you don't want to do is be stuck in those scenarios. Now, yes, you're collecting dividends along the way, which sounds so cool, right? And I did a little thing on TikTok here with ULTY. And the problem is it seems so cool until you realize you had to pay taxes on this, and it's literally pain. I am working on a public profile of like a TikTok stock watch list because we always have so many good recommendations in the chats on a lot of my videos. I'll post a video, be like, hey, I'm thinking about buying this stock tomorrow. But if you have another idea, hundreds of comments. And what you can do is you just go through those comments and do your own research. But there are a lot of times there is a lot of really good stock tickers in there. You just have to do your research because what works for me might not work for you. And that's why I never tell anyone to ever buy something. NVDY has NAV erosion. I'm sure it does. Some of the tickers I just know because of, some of these crazy covered call, they're doing too much. Let me see if there's any news about Opendoor because you guys have got me on Opendoor. Will Opendoor's, what is this one? Okay, we got a little article out. Will Opendoor's leadership changes in Jane Street's stake signal a shift in strategic discipline? They need some discipline because I'm telling you, that CEO, the problem with Opendoor was they didn't do anything for a couple years. They're like, how's the market slow? We're just going to sit back, relax. They're like me on a Sunday morning, drinking coffee and just talk. See what I'm saying? Now they have some people with a vested interest to get back in the company, which is exciting. But it still takes time for that vested interest. It's like a snowball effect in business, okay? You got this little ball, you get it rolling, right? It's going to take a while. This is called snowball effect, okay? It's going to take a little while for this to get bigger, and that's how business works, okay? Opendoor, they got the snowball going, and now it's time. It just shrunk, right? Housing market sucks, everything, high interest rate environment. Now they're going to try to get this thing going because people are still buying and selling homes. It's just at a very slow pace, okay? In September 2025, Opendoor Technologies announced the appointment of Christy Schwartz as the interim CFO. So we got new CFO, CEO. They're going to take their employees from 1,400 down to 200. I hate to see people lose their job, but always remember the number one purpose of a publicly traded company is to make money at all costs. And literally, if that means getting rid of people, that's just part of the day. So basically what this is saying is Opendoor Technologies is projected to deliver $4.7 billion in revenue and $239 million in earnings by 2028. Is that total, talking 2026, 2027, and 2028? This outlook assumes a 2.9% annual decline in revenue and earnings. That's not good. I'm telling you, there's a lot. I know you guys love getting hyped up about Opendoor because a lot of people have a financial investment and that creates an emotional attachment to Opendoor. And I'm just saying, please be careful. RYCEY, RYCEY. What is this stock? Oh, Rolls-Royce. Oh, wow. How's Rolls-Royce been doing? Rolls-Royce has had one hell of a year, by the way. This thing has done very, very well. Rolls-Royce is actually killing it, guys. Yeah, they make the best airline engines. Hey, Mikey, plans for BORR. Yeah, so guys, I bought BORR. I plan on for now holding it. This is definitely it's a drilling company. It's not really, it's a little different for my investing appetite. I only put like $1,000 in it, but it does pay a small dividend, and I'm like, this is kind of interesting. So this is an interesting one. I'm going to continue to hold BORR for a little while. My biggest concern is it was a 52-week low of $1.55, so it's up 50% from that. But that's okay. At least the company's making money. It makes me feel a little bit better. A lot of builders are starting houses now to sell next year. Yeah, so a lot of projects, I don't know if you've noticed in big cities and a lot of places, a lot of projects had started and stopped. I have one right down the street from me. It was supposed to be like eight or 10 stories. They had the crane. They took the crane down. And they just stopped the whole project. Those interest rates spiked so fast. No one was prepared for that. It cut so many projects. Now real estate, I feel like, is starting to come back from a development standpoint. So you have to also think they need to build these homes to sell these homes. And somehow we're still at a housing shortage. But the problem is now the cost of stuff is so expensive. Labor's expensive. It's hard to find labor. You import all this stuff that's now getting tariffed to death. So the actual cost of Opendoor articles is just Motley Fool writes about why Opendoor is going to crash, and then the next day why Opendoor is going to reach the moon. I was in Bloomberg talking about Opendoor, so that's pretty cool. Let's see, at what price will you sell your open shares? I'm just gonna hold it for a while, just to kind of ride it out and see. I might buy a little bit more if I see the stock price come down, especially into like the 6s or 5s. Buy a little bit more as long as I see the CEO and everybody over there getting to work. Kayla, we are talking the same business here. SoFi. I absolutely love SoFi as a stock. SoFi is doing well, guys. I first bought SoFi under $7, and then I rode it. It was down to $4 at some point, somewhere around 4, yeah, in 2022. I've held SoFi for a while, honestly. Then came back up, and now it is up. I'm going to continue building my position in SoFi. They continue to build out different products and services that I think are pretty amazing. And yeah, it's going to be interesting. Someone just commented, who was that? Talking about OPAD. So SoFi for me, I still need to buy like 350 shares by the end of the year to reach my goals. All for pad solution. The problem with a lot of these, like OPAD and Opendoor, they're riding off the success of like the hype for this market way before the market has had a recovery. I mean, OfferPad, let me see what it was earlier this year. It was another dollar stock. Market cap's only 137 million, so that's good. But sometimes with some of these, like the good thing for Opendoor, they now have, it seems like, a lot more capital to compete in this space of owning the homes, which is, you're going to see the business model for Opendoor is going to change 100%. They're realizing owning these homes and the cost of that is so crazy. They're going to be figuring something else out. Pad, to go nationwide with a smaller market cap's a little bit more of a challenge, I think, but it could be interesting. Tomorrow will be a good day to day trade. I don't know. Yep, that's what you say. It could be. I think I am going to buy a new stock tomorrow. It is kind of been beat up. I'm going to make a video. I might go try one today. It's been a little while. So you guys will see what stock that is. If you're one of my followers, that would be good. What do you think about Costco? So Costco, I think I own in a couple of my ETFs. I don't own the stock itself. I know it got killed the other day. Costco itself, here's the thing with Costco. I love the company. I like the stock. I haven't bought into it. I wish I bought into it 5 years ago, 10 years ago, something like that. I mean, if you bought Costco 10, 15 years ago, a good ride right there. The problem you get to the point with some of these, something like Costco. There's Costco's everywhere now. So to go for Costco to go from $915 a share to $1,800, so to double again in the next, say, 5 years. Is there enough space in the US or expanding internationally for Costco to replicate to 2x what they have currently built? I'm in Atlanta. They got at least three Costco's here. Do they have enough runway to double it? Because in theory, they need to double what they're doing to double their stock again. I don't know. It's like we've probably been shopping at Costco for a while, some of you guys, and never thought of buying the stock. And that's why it's good for us to get on here and talk about it. I'm going to give you guys one that we haven't talked on here. And if you look at like 10-year on this one, Sherwin Williams, the paint company. Now, if I bought Sherwin Williams, it's at $341 a share. If I bought it in 2010, $20 a share, I could have 20x'd my money. And if I I didn't have the money to invest, so that is an issue, which I talk about here sometimes. I would have been 20x. $1,000 would have been, 20,000, and the 0.92% dividend probably would have been an 18% yield on cost, meaning the time you bought it versus the yield you have today, yield on cost. If you're not familiar with yield on cost, I'm not going to explain it in this video. It's more technical, not too difficult to understand, but look up yield on cost. You have a better understanding. Sometimes what happens with dividend stocks is this. Like, I love my QQQI. It's paying a minty 13% dividend. That thing is not going to continue to go up. That dividend is going to be kind of flatlined. Now, you get something like Sherwin Williams. When you first started, you're like, Mikey, this only pays a 1% dividend. It's not sexy to me, okay? That's fine. So you have a 1% dividend. But what happens is the stock has 20x'd over the last 15 years. They continue to raise the dividend. So let's just say this. Let's just say QQQI wasn't around in 2010, okay? I'm going to make this simple for everyone. In 2010, you bought QQQI and you bought Sherwin Williams, okay? QQQI, because of the way they do covered calls, it maybe will go up a little bit over 15 years, very little, and it's paying 13% dividend. Sherwin Williams, you might have only started at 1%, okay? But this stock has, in 15 years, has not only 20x'd, but when you bought that $1,000 worth at a 1% dividend, Your yield on cost on QQQI is still 13%. Your yield on cost after 15 years, you're at like 18%. So now you have that 20x plus, which you can do this with stocks. You can just pick ones that done really well and it looks great, right? So it could go the other way. But your yield on cost, because they continue to increase the dividend as the price goes up, the money you invested, that initial investment, you're making now 18%, where you're kind of stuck at QQQI. A QQQI and those high yield dividend ETFs, it's great for today and still for long term. But if you have the patience and understand yield on cost and you buy and you kind of hold it and the dividend keeps going up. I actually am going to be making some videos about stocks with their dividends increasing every year. It's like getting a raise every year and it compounds. You can be in a good position, yield on cost.